Hi, this is Sive Morten with the daily update on EuroFX. I post my exclusive market overviews with the key political and economical events, charts and important levels on the ForexPeaceArmy.com forums weekly. This short video is a response to rapidly changing situation on the currency markets and should help you to stay on top of the game and be profitable. I suggest you to visit the ForexPeaceArmy.com forum and read my analysis for the week before watching this daily video. Okay guys, let's take a look again at the euro currency. Well, unfortunately, the market in general behaves not in a row with our expectation, but that's not our fault. It's probably the reaction and result of the commentaries from the FOMC, from the Ben Bernanke, who said that in fact they see the big risks of disinflation and they will probably continue with the quantitative easing program for some time. So it's not time yet to close this program and start to think about the contraction of this program. So we probably will see in the nearest future, the continuation of the inflow of the additional liquidity to the markets. So that's probably will not change much in the nearest perspective because they see the moderate recovery in the economy, improvement on the labor market. But in general, guys, I have some worries about this huge liquidity inflow on the United States economy. And if we will try to think logically about this, it's very difficult to call this bubble as the improvement in the improvement in the economy, because the Federal Reserve is buying the bonds, the mortgage-backed securities, treasury bonds on the open market. And who is the most great holder of these bonds, especially the mortgage-backed securities? Obviously, that's some funds and investment companies, and definitely not the population, and not some plants and industrial companies. It's probably financial institutions, banks, and other some sort of the companies, financial companies. Hardly some investment fund and hedge funds will invest the money that they will get from the Federal Reserve on the open market. If they will say they will sell these bonds, they will invest it in the stimulating of the loan activity and will invest this money in the loans, long-term loans for the production companies and so on. That's why I think that the additional liquidity will come on the stock market probably, because it's not much opportunities to invest such big inflows in other sectors. Well, maybe some outflow will contract and will become slow from the bond market as well, because the yield of the treasury bonds has risen significantly in the recent time, but currently this pace probably will reduce, and the yield of the bond on the bond market probably will turn to some sideways action, or even will become even lower. So, but in general, the overall tone of the speaking of the Federal Reserve Chairman was not very surprising, and you can see it by yourself on this picture. So the reaction was really moderate on this statement. In fact, market just has shown the indecision pattern. That is highway pattern that just increased volatility, long shadowed candle, but price stands at the same area. Well, from the technical perspective, there are two interesting moments that I would like to discuss with you. First moment is, you can see market finally has reached our target that we have specified, and it's 1618 extension of that swing. That was our butterfly. It's a bit skewed butterfly, but still on the forward time frame, that was the butterfly. Market has hit it. Potentially this is reversal pattern. The second moment is take a look at this situation. We have discussed it already. That market, when it pierced the overbought condition very strong, shows the retracement, very often shows 1618 extension before reversal in opposite direction. So that has happened. Strong piercing of the overbought, retracement, 1618 extension. So if market will show this action again and will turn to the downside, that probably should happen somewhere around this area. At least currently we have the reasons to think about it. Also take a look, that is the weekly pivot resistance 1 that holds retracement to the upside. Well, for bullish development and to get the confidence that market could really continue move higher, we need to see some acceleration for the weekly pivot resistance 1. That will be perfect from the bullish development. We have discussed it in our weekly research. But currently market still stands flat inside of the range of this candle that was formed yesterday. And here we have, in fact, dealing with the high wave pattern, and the high wave pattern in some itself is not the reversal or continuation pattern. It depends on breakout out of the range of this pattern. So if market will take out the highs of the high wave, it means that probably market will choose the upward direction and will continue move to the upside. The same is true for the downward action. If market will break through these lows and will take out the low of this high wave pattern, then probably market will continue move to the downside. Well, the high wave pattern itself just forms the borders of free flow for the market in the short term, but exit of these boards probably will show us the potential for the direction. And until market stands inside of this range of this pattern, hardly will happen something strong, well, and some real action. We need to see on the market out of this range. On the 4-hour time frame chart, sorry guys, another moment that you have discussed yesterday on the forum is concerning the double repo pattern. Well, in fact, as I said yesterday, the thrust of this for this potential double repo is not very impressive, mostly because market shows two deep retracements. So this action retracement, that was almost 50% retracement. From this swing, 3-8 retracement, and market hasn't created new high. So that was inside action of this candle. Here again, new wave of the thrust, deep retracement, 3-8 retracement here as well. So I can't exclude the possibility that this double repo could work if it will appear, but we should treat it maximum as the lookalike pattern. And as I said, personally, I do not like this setup very much. I just would like to show you another potential for the double repo is on the S&P, and here I really like this. So take a look at the thrust is much better than on the euro currency. That could be the butterfly here with the 127 extension that will simultaneously hit the target of this big ABCD pattern. That's just a perfect setup on the market. And if market will start the double repo here, that will be a very nice opportunity for trading. Just keep in mind for those who trade stocks and equity indexes, which probably could be really nice setup. Well, and speaking about the double repo here, so that I have some suspicions and warnings about the effectivity of this potential trade. Well, I can say that it's very nice looking situation for the double repo pattern, but maybe it will work, who knows. Now let's take a look at the 4-hour time frame. On the 4-hour time frame, we can't say that market has erased totally the bullish setup, because we said that it will be perfect if market will hold above this support line inside of this channel, and from the bullish perspective we would like to see the acceleration to the upside. Currently we see only the broadening triangle, broadening top pattern that is forming here, and very often this becomes the reversal pattern. I can't call it, can't start to think about the diamond pattern. That is also possible, but we have too few price action to the right to speak about the diamond. Maybe it will be formed, I do not know. But currently this is the broadening top, and this also significant pattern. As with the high wave pattern, the broadening top has significant two levels. It's high and it's low, and that will point the direction of the breakout. So market should exit from this range of this broadening top either to the acceleration to the upside or to the downside to choose the direction. So I do not see much possibilities for trading on the euro currency right now. Probably the Japanese yen is still interesting, more interesting that we have discussed yesterday. The action now stands on that the upside there, and probably this setup that we have discussed yesterday will work. Here, probably we should wait for the breakout in one or other direction, or at least to see some clear reversal pattern. For instance, if diamond will be formed, that will give us more confidence that probably the development will be to the downside. Well, we'll see. But here, maybe you will find something to trade on the 15-minute chart and the 5-minute chart until market stands inside of this range. Probably could be done some scalp trades inside of it. But that's not my way of trading. I do not trade such environment, and prefer to find some other opportunities for trading or shift to another asset, find something more interesting there. Well, on the euro currency, we still need more clarification from the market. We have just discussed the levels to watch for and what particular significant moments could happen and what they will tell us if market will show some breakout or some patterns will be formed. Until that will happen, it's not very interesting to deal with the euro currently.